So our interest rates headed back down to 3%. Yesterday, the Federal Reserve did a 50-point basis cut. And you're probably wondering, what does that mean for the future of interest rates when it comes to real estate? So today I'm going to be talking with our lender, Robert Rodriguez, and we are
Afternoon,
going to
Rob.
go over what this actually means for the market in general and what you should expect. So my name is Andre Janal with the Adams Group here, and we help people like you every single day make decisions on whether or not making a move in real estate is the right thing to do. So if that's something you're interested in, our contact information is in the screen below, in the description, so you can figure out. Let's have a conversation, set an appointment, and figure out whether or not it's something to do. So Robert is our main lender. He's an agent on our team, so he's dual licensed.
Dual licensed.
So he is an agent and a lender. So we work very, very closely. And yesterday, the market was not sure whether or not they were going to do a 25 basis point or 0.25% or 0.5. And the market came out and the Fed was very aggressive on the 0.5. But that now sparks the question, what does that even mean? So Robert, tell us, what does that even mean?
I think it's already meant something so far the last couple of weeks and last couple of months. The interest rate drops that were expected, whether it's 1/4% or 0.5%, that's already been factored into the market. We've seen interest rates last couple of weeks kind of go down in response to or in reaction to the possibility of these rates coming down like they did yesterday.
So the basis points that came down yesterday were already baked in. So that drop in interest rate we saw from the sevens to the 6.2 or 6.2 to 6.5 range, that has already been factored. That was that. They just knew that was going to happen.
So, some of that was factored in, but a one-to-one correlation, probably not. The interest rates, we saw last year historic high rates. We saw them in the eights. I think we saw the sevens for a good portion of this year. Now we're seeing in the sixes right now. We have been able to, after a consultation, find interest rates even below 6%, depending on a customer situation.
So the question we get a lot is the people are looking. I used to get this in investing a lot. When if you're at a pier and you miss the boat, you miss the boat. And then there's some people who believe rich people don't miss the boat, they make the boat come back. I used to hear that all the time.
Yeah.
And so do we think or believe that there will be an environment coming back where the 3% interest rates of 2021 will return? Because I do think that's what people are
Hoping for. Hoping for.
Do we
Yeah.
think that's going to happen?
Like I say, frequently, my interest rate crystal ball broke today. Do we think interest rates, have room to go back to where they were at historic levels? Some, 50-50. Some say we have that potential. Some say we don't. Different market conditions back then kind of drove interest rates where they were. But interest rates are cyclical. If you've watched rates long enough, you will see that eventually, independent of market conditions, they kind of follow the beat of a similar drum maybe they followed years before.
Right. And so, somebody who's looking now, they're asking, okay, the Fed is starting to cut rates. Is now, should I wait for them to cut further? What does the average person who is looking at their situation right now saying, the interest rate environment was too high. Now we're starting to see some relief, but I have needs. My family has grown. I'm moving. My job is changing. Like, what is the right advice to give to those people?
Actually, and exactly how you described it is the right way to lead with how do you approach this. Start with your needs. Start with what it is that you're looking to accomplish. Forget about market conditions. Forget about the political environment. Forget about the election year. Yes, all those have factors into interest rates under certain conditions. But before you start with the external, start with the internal. Start with a needs analysis. Start with sitting down and prioritizing what are you trying to accomplish, because independent of interest rates, whether we're in a rising interest rate or declining interest rate environment, customers will have options to navigate either one of those situations. So we were talking earlier about not playing the interest rate double Dutch game where you're waiting to jump in and it's now the perfect timing. I'd much rather sit on the sidelines and surround myself with good people that have knowledge on both situations. When rates are going up, rates are going down. But I wouldn't stop there. I'd make sure before I entrust someone to share with me what their thought is, I'd want to make sure that they understand my situation, my family's needs, or my individual needs first before they just start applying things that may have worked for the other families or people they sat with earlier today.
Yeah. Because I do think there's sometimes a stigma if you work in real estate or you work in lending that whether or not the sky is falling or there's a meteor about to hit the earth, that we think that now is the perfect time to do something. And I just don't think that's true. I think
Agreed.
that in every market, people need to do something.
Mhm.
And so whether it's job change, whether it's family size change, your needs change, and
Mhm.
in any market there will be transactions.
Sure.
Now, what I do think will change is those I want to do something,
And
or
I
I
have
would. That is a different conversation than
sure.
I have to do something.
Yeah.
Now that I want to do something,
Mhm.
individuals are
Mhm.
starting to look at the environment, going, "Is it changing?
Mhm.
Is the tide turning?" What do you say to that?
I think part of the answer is yes, the tide is changing, but how far is that tide going to take you out or keep you inshore is still yet to be determined. So again, we will sound like a broken record, at least from the lending side, every time we talk about this. When a customer is curious and looking for that $1 million answer to that $1 million question, is now the time.
Right.
Is now the time for me to prevent FOBO. We joked about that this morning.
FOBO,
Fear of better options. If you
fear
don't
of
know it,
better options. If you haven't heard that,
am I holding out for that 3% rate, or do I have the ability to achieve something like that 3% rate in today's environment without it really putting you at a detriment, or without it really forcing you into a time frame that maybe was not appropriate for your situation? So again, it sounds a little bit ambiguous, or it sounds a little bit aloof, but it's a very specific to your situation. Every person that I'll sit with, they may have the same credit score, they may work at the same place, but their needs in the way that they've got to leverage that mortgage, whether it's debt consolidation, whether it's a purchase, whether it's asset planning. There's so many ways to leverage it that you could have the same situation as a neighbor, a family member, or a loved one, but you cannot take the roadmap that they applied to their situation and expect it to work for you.
and so and we talked a little about that, the
Mhm.
unique situation, and there, from a lender side, like we talk about what separates you from. Would it be fair to say like an institutional lender? Is that the right term for that?
That's a good way of thinking about it. Yes, that's a good way of thinking
So
about it.
what? And I plug Robert a ton because his expertise is invaluable because we navigate some complicated situations.
Mhm.
Honestly, most transactions that we deal with aren't so straightforward. There's always a wrinkle or a caveat or a need where it comes down to how to leverage current equity, how to leverage current, sell before you buy, or having cash options and stuff like that. So, what is it that you are able to do that is different from like an institutional lender? Like, how does that
Yeah.
differ with what we do with you guys?
The initial process starts the same. Any lender's got to document the last 2 years of your life, where you lived, where you worked, or how you made your income, and some basic asset information. That application allows us to pull your credit, take a look at the documentation. Is important for the underwriter to review as well. But that's just the beginning part of it. After that, once we get an acceptable program identified, we make sure that program is hitting all the things you need it to do. There's a chapter 2. And we
Right.
talked about that today. The chapter 2 is going to be the interest rate question or the interest rate consult. When you work at, as you shared, the institutional, your savings and loans banks, where you go to do your checking, where you go to balance to make sure your bills are being paid and all that good stuff. When you sit with those loan officers, as I was one of those once upon a time, we got interest rates, and there was no very little options, so to speak. So the interest rate came out for that day. Let's say the 30-year fix was advertised at 6%. Customer came in, wanted the 30%, then we could marry those particular needs. But in working with the other lenders that have the ability to give a consult about interest rates, because if you don't know, interest rates come out in a range every day. They trade almost like a
Mhm.
stock. They depend on the financial markets, the bond market, some treasuries, and some other things that we could talk all day long about how our interest rates come out. But that's only the first side of it. Your situation or your customer situation is the other side of it. Some of the things that go into what interest rate is appropriate for you, credit score, obviously. Things like your debt to income ratio, the mathematic formula that every lender has to do, calculating how much you have coming in versus what you have going out with the new mortgage payment included in that total. So those numbers, what's going in, what's going out, different programs have different threshold allotments or what they will allow. That's going to have a different interest rate. Your property type can sometimes factor into your interest rate. A single family home. Now we're talking risk categories. A single family home may have a different interest rate than a manufactured home. Single family home versus a condo or townhome, there may be a little bit of a difference. So the point that I'm making is interest rates afford you so many options. And if you don't know where to go, where to look, or where to turn to, you may not be having a conversation with what those options look like for you. Or if you're just driving by and maybe you saw an advertisement for a particular rate, let's say there's a big billboard taken out here in Hernando County for what an interest rate is for a particular lender, understand the fine print underneath that is this is still subject to your individual situation, your individual qualifications. But what they don't put is your individual needs. And I think the important thing is to start with that needs list and then work backwards, because as you will find, and I'm sure as your customers have found working with us, you will have those options. You will understand those options, and we will cover them as many times as it takes until you see the merits of those particular options working for you.
And I think one thing you left out, and I think is the after hours. Because if you work with me, you know that we will text and call and be on conversations into the evenings,
Sure.
into the weekends, to make it happen, sometimes even last minute. I know that you have had many a late conversation with a client after hours, 8 o'clock,
Sure.
9 o'clock on weekends,
Sure.
to have those consults. Do institutional lending organizations do that typically?
Traditional lenders know, in the context that you're framing it now, that they're usually a 9 to 5 type worker. Some will give you their cell phones, but you may find that they're not answering it after hours. It's just more maybe convenient when it's convenient for them.
Right.
So we don't punch a clock, nights, weekends, holidays, because guess what? Those questions, those needs, the ability to retool, repivot, or set a customer up for success, that just quite frankly can't be done on a 40-hour work week. So yes, we do share with all your customers, and you've heard me tell them, listen, if we don't punch a clock, this number's afforded to you, nights, weekends, holidays, you call. If you cannot get a hold of us, shoot a text or a message. We will contact you, because that is, if it's important to you, it's obviously important to all of us.
Yeah. And so this video is really to point out that even though the Fed cut rates, and the big question is what's going to happen next, the answer truly is, and not because we don't want to say it, is that we don't really know.
Correct.
And I think that that's going to be the key, is we don't exactly know what's going to happen next. But I think that people have to always be prepared.
Agreed.
And sometimes being prepared means having the consult ahead of time, sometimes months ahead of time. It does not mean you're going to run their credit. I think people misunderstand that.
Correct.
That they think that the minute they talk to you, it's like an instant credit score hit.
Or they're locked in and they don't have the ability to seek elsewhere.
But the consult piece is the preparation for the opportunity when it presents itself. And so if you can get anything, is to take that information, that the ability, not only just on the real estate side with me, but on the lending side with Robert, we are actually one of the few organizations that have lending and the real estate on the same team, that we're constantly in the same office working together, because I think people don't really realize how important the lender is to the transaction.
Sure.
And so contact information is in the description below. We hope you found this video helpful. If you have any questions or any needs, reach out to us. We're happy to have a consult. Sometimes we'll even hop on the call together. Absolutely. Because I do think that they go hand in hand. And I think that's a nice benefit, that we will do a call together if we need to discuss all the different options. And Robert's also an agent. So,
I get to think like an agent, act like a lender.
There you go. And so if you found value in this, if you made it this far and you found value, if you could just share it, like it, do whatever it is, depending on the media platform that you're on. Otherwise, thanks for watching, and we hope to see you in the next video.
Thanks for your time.
All right.